What's up guys, Simon here. In this video, we're going to go ahead and talk about the next Great Depression. That's right, it's actually potentially here. We are in a massive recession. It's happening. We're seeing it in the stock market, which has hit one of its lowest points in a long time. We've also seen the real estate market go the opposite way and start turning downwards, where houses are staying on the market, homes aren't selling, people are backing out of their contracts, and the interest rate on top of it all continues to rise. So in this video, we're going to talk about the next Great Depression and how to prepare for it, or even this recession. Before I get into this video, I ask that you like the video, subscribe to the channel. I appreciate it. Let's get into this video. Okay, so Dr. Doom is the guy that predicted the 2008 crash, has said that we are in a long and nasty recession that's coming, okay? So we have to discuss that. Many economists believe the recession is mounting and it's not going to get better because of the rising interest rates. On top of that, you got one of the biggest stock market collapses that's happening before our eyes. Cryptocurrency has tumbled, with Bitcoin going below $20,000 and staying there. Ethereum, there are so many memes on Ethereum and Bitcoin with people just putting up a picture convincing their mom or friend or whoever to buy it, and then the meme is that person is now living in the basement or something like that. Yes, cryptocurrency, the people that jumped on it late have been crushed. The stock market has been crushed. If you invested about a year and a half or two ago and you did not sell, you are in trouble. There might be some good opportunities to buy now, potentially, if you don't think it's going to tumble further, but a lot of economists do believe that we're not at the bottom yet. Earlier this year, Bank of America strategists have said we were in a mild recession. That has changed. They're thinking it's a deeper recession than it was. But some economists are thinking that only a deep recession will fix the 40-year inflation that we've been having. However, I don't think anything fixes an inflation. You cannot get what you could have got, say, 60 years ago for the same price. It'll never return. So people are going to have to get paid more. Not everyone's going to be able to afford things, and not everyone's going to make it out on top. That's just the way it is. So Dr. Doom is saying that a recession is likely to hit by the end of 2022, and then it's going to spread globally in 2023. Well, it actually is already spread globally. So the recession has hit many economies throughout the world, including European countries, Germany, Russia, and Ukraine, and others. So overall, the recession is everywhere. We're seeing protests everywhere because of economic foes. So overall, we are in it now. The Feds have obviously put an aggressive interest rate hike to fend off the inflation in the US economy, but that's affecting a global economy. And for the first time ever, Goldman Sachs is predicting that China is going to have zero GDP growth in 2023. That says a lot for a country that pretty much produces everything for everybody. The economic downturn is here. It's coming. It's only getting worse. And in this Bloomberg interview, Dr. Doom basically said that all of the actions taken by the federal government are just making things worse for the economy. Rising interest rates and rising global debt is creating economic instability, and it's going to continue to happen as long as those interest rates remain high. Credit companies and merchants are putting a tight grip on all approvals for credit cards, applications, bank accounts, etc. So the economy is tightening and things are getting tough for anyone to borrow any type of money. One thing I've also seen recently is contractors are also seeing this effect, with less and less homes being remodeled and put back on the market and more homes staying on the market. That's a big indicator of a recession or even a housing downturn, which actually is an indicator of an entire global economy. And according to AsiaMarkets.com, Mr. Hunt, who is an advisor, has mentioned that we're headed for a global depression. And unlike the 1930 depressions, this is a slow-moving depression that's going to really captivate all of those economies that are global. it's going to be one of the worst downturns in the world history because of the fact we are in a slow-moving car crash, according to him, and it's caused by large money issuance. So overall, the middle class, according to Mr. Hunt, is going to take it the worst or get hit the worst. And I do believe that to be happening because they always get the least amount of help and still pay a good amount of tax. So I think this will be a global crisis, a global depression, and not just a U.S. economic problem. And although our U.S. housing market is experiencing and has experienced some of the most rapid economic shifts in the last several years with spikes and now downturns, this potentially could lead to some of the most financial instability here in the United States, and it will lead to instability in the global markets as well. You also have an issue with rising energy costs, with many countries pushing away from traditional energy producing means to more economical or even green energy productive means, which is slow and it's not producing enough energy and the costs are high. So energy costs for lots of European countries, especially with the war, has risen. And also here in the United States, energy costs have gone up as well. It's getting ridiculous. So the average household is making less money, yet the cost to have that house functioning is increasing to the point where it's above their pay grade. Another crazy thing that's happening is there is a huge appreciation of the US dollar in comparison to other economies or other currency around the world. So this is potentially a global problem if the dollar continues to rise above all other coins or currencies. And that is terrible news for the global economy. That could also push the global economy into a Great Depression. For example, the pound sterling is down 21% over this year compared to the dollar. The Japanese yen is down nearly 20%. The euro and the Thai baht are down about 15% compared to the dollar. The interest rate hikes are helping the US dollar maintain its power. So although a strong dollar in comparison to other countries is good for the United States economy, it could help with the inflation. It actually can knock out countries that are developing or that are not, or that are relying on. It can bankrupt other countries that have developed debt that have developed debt with the dollar dominated debt soaring. So overall, the longer that the dollar soars above all other nations, the longer that other nations may be in stagflation, unable to pay their debt. So that's going to contribute to a global economy that is going to be in potentially a depression. So overall, we're seeing one of the craziest markets that we live in today. My advice on this type of market is to be cash heavy or be ready to take advantage of opportunities that land in this type of economy. It is risky. We're not at the bottom. However, if we have learned anything from 2008 or 2001 or some of the past recessions and even depressions, we have seen that prices come down and that's a good time to buy. And when the prices are down, you buy, you make money on the buy, and then you sell. So we're seeing a lot of people selling now and even just before this recent dip or crash, and they have made a lot of money. People have positioned themselves to buy up as much as they can in the next sector that's coming in this depression. And if you have the money to buy up real estate, stocks, etc., that surely will continue to rise as the overturn in the economy will happen. Anyway, the Great Depression is coming. Let me know in the comments if it's here already. I'll reply. Thanks for watching. Subscribe, and I'll check you here in the next video.